Hi everyone, this is OnBrain Capital back with another video update. It's my first video update in a couple of weeks. Obviously, anyone who follows my YouTube channel or Twitter channel will be aware that we got caught in the FTX situation. 85% of the active portfolio that I was working with caught on FTX last month. It's something that was a big shock at the time. I've been away from the charts basically since, and trying to get affairs in order to protect the claim that I might have against FTX as a creditor, including going all in Grayscale Bitcoin Trust as a last ditch effort to protect my capital because the counterparty of tokenized stocks on FTX was a different entity to FTX Trading Limited, the main arm of FTX International. And the idea is that they were alleged to have held the stocks one to one, meaning that they should be backed. And if they are, then that gives those who held tokenized stocks secured creditor status in the bankruptcy reorganization. So that's the plan. That's the update. Obviously, from a capital standpoint, uh, a big setback in the sense of trying to play the markets with a certain capital balance. When you play percentages, the more capital you have, the better your performance will be on a nominal basis. So we've been basically returned back to the position that we were in 2020, despite everything, despite the calls, despite playing the cycles. I wouldn't say perfectly, but doing very well, um, getting in, getting along with receipts on Twitter, in case people think this is just a LARP. Getting long in this area, predicting a volatility breakout, uh, getting caught by this move down, simply because it was just such a small move relative to what was expected in a Bitcoin bull run, but correctly noticing what was occurring here and preempting the markdown that occurred. Um, I said that I would make a video update of this Dixie flow chart that I have called it, um, which basically was one jigsaw piece in the puzzle that was able to correctly identify what was happening in Bitcoin and the risk markets. So using the dollar index as a de facto money flow indicator for crypto, we were able to see certain patterns in the flow of capital into the dollar index, and that is away from risk and away from the euro and the pound into the dollar. Um, and that coincided with, on a relative basis to the M2 money supply, a distribution in Bitcoin, and it was fairly well called, again, with receipts on Twitter. Um, and it's interesting to note here that we are getting the first signs of a stalling of this markdown, and that is an immense down move in the dollar index, which has essentially been matched with a an up move in the pound, an up move in the dollar, an up move in the Chinese yuan, and that is what this is represented in the main. So using the same logic that was applied correctly here, flow out of dollars into risk before a markup. It doesn't have to correlate on a contemporaneous basis. Like each time the dollar goes down, Bitcoin does not have to go up. It can be the coiling of a spring, and this is the tip off to the flow of capital. And that's what we saw here. We saw money flowing out of dollars while Bitcoin was sideways before a markup, and money flowing into dollars while Bitcoin was once again sideways, albeit in a bigger range, which precipitated a markdown. And now we see the first indication that the flow of money is going toward risk again. Does that mean we're going to go straight up? Maybe. As I've shared numerous times, my target for a scammy stop hunt is this swing point here. Take the stops of that swing point, just like they did here. Took the stops of that swing point there. Similar move into Q1, Q2 of next year. But does that have to happen straight away? No, it does not. The coiling of the spring could see the dollar distribute while Bitcoin continues to go sideways before building a base and then moving up into next year. Maybe not that far into next year, but the point still stands. Um, so it does not have to be immediate. Just like this moved slowly, this moved incredibly slowly. If we measure that, Dixie was gaining ground for 64 weekly bars before the risk markets in crypto eventually started to break down. So these moves are not basically to signify that risk is back on. It's to signify that there is a changing of the character of the markets and a moving of capital away from fear and treasuries and fiat back into the risk markets. And that can be quantified. That can be quantified by the reverse repo uh, balances, for want of a better word, which we can correlate here in March and April of 2021 with the topping of risk. And this is the flow of money away from the risk markets into treasury bills in the Federal Reserve. And we see this uptrend, which is undefeated until this point when the character was changed. We're now, in my opinion, retesting the bottom of this reverse repo distribution zone with even the same stop hunt as they gave Bitcoin uh, before the flow of money downward in this graph, which would indicate the money is coming out of treasury bills, out of safety, out of fear, back into the risk markets. And that is supported, in my opinion, by this move in the 10-year yield. Now, my view the whole time has been that there will be an indication that insiders are aware of what is about to happen 6 to 9 months down the line, and that they will adjust their expectations in advance. In advance. And in my opinion, this is what is occurring here. Yields are going down, indicating that those who have the capital to control the market in treasury bills or impact the market in treasury bills are aware that there's a pivot coming, and they're taking their money out of treasury bills and they're putting it back into the risk markets, as is evidenced, in my opinion, by reverse repo and the behavior of the currency markets. So let's just go back to crypto. Good old crypto. What do we see? Let's go to the legacy markets trading crypto. Put log back on. We see, in my opinion, this behavior at the lows is the same as this behavior at the highs. We can invert the chart and you can see it's just a stop hunt of the key liquidity area before a violent move away. And I believe that's what's occurring here. In my view, clear accumulation structure. I think this will be seen as a spring in this accumulation area. Further to previous videos and the umpteen tweets that I've sent out, I don't believe in the doom story anymore, at least not at this point. Too many people looking for 10k. I think it's time they took out the swing here, made people think it's bullish again, and then distribute on retail again at the 50k area while the Fed pivots 6 months from now because the 10-year yield has signaled that that's what's going to occur. And the Fed will pivot middle of next year, and everyone will think risk is back on, even though Bitcoin will be have gone from 15k to 50k, ready for a distribution, and that is when retail will get bullish again, just to be distributed on, to be dumped on, and maybe then we go to 10k as the final low of whatever recession, doom, gloom, whatever the hell happens. I don't buy the doom is imminent. I think there's this space needs to be filled, both on a technical basis and on a sentiment basis. And that's been the call for a couple of months now. Portfolio wipeouts notwithstanding, I still believe that to be the case. And this is just a stop hunt. If we look at the volume, more volume on this candle. This little buying wick had more volume in it than did the COVID capitulation bounce. That, in my opinion, is telling. That is capitulation. And the fact that the one of the biggest exchanges by volume, biggest probably by reputation in the world, uh, crypto exchanges can go to zero in literally 2 days. It it took a while for me to get back into the charts to be able to see this candle because while I didn't get wiped out by incorrect trading decisions, these two red candles are a representation of the day in which my money was frozen. So forgive me that it was quite difficult to come back to the charts and see this because this is a forever indelible mark of the counterparty mistake that I made and something that I will have to own. However, the fact that this is all they could manage on that news, a $32 billion market cap exchange going bust in 2 days. 2 days. Bang, bang. Good night. Losing $10 million of customer deposits. That's all they could manage on that news. You want 10k? If they were going for the 10k, it would have happened here. In my opinion, this backstopping volume, this stopping candle volume did not come in to bring the market to 10k.